My phone has been ringing up the hook today with questions about the Paycheck Protection Program. This is an amazing program that just came out a few days ago as a result of the CARES Act. This is a program that enables you to basically get up to 8 weeks of payroll, rent, and utilities completely forgiven. It's a great way to get a leg up for your business. If you missed out on your Obama money a number of years ago, now's a great chance for you to take advantage of some of that Trump money. I'm really excited to talk about the new SBA loan assistance programs that came about as a result of the new stimulus package and the CARES Act. The first one we're going to talk about today is the Paycheck Protection Program. This one's amazing. In fact, it's almost too good to be true. It's so good, frankly, I'm surprised they passed the thing, but they did. So we're going to take advantage of it. And then secondly, not as exciting, but still potentially really helpful for many small businesses, is the Economic Injury Disaster Loan Program. So to get started, the Paycheck Protection Program under the CARES Act came into effect just as I record this on the 30th, just a few days ago. It allows for small businesses to get a loan of up to $10 million. And the loan that you can get is calculated by taking your average monthly payroll expenses for the prior year and multiplying that by 2.5. So your average payroll expenses are defined as your wages, your employee benefits, retirement plan contributions, and the state unemployment tax that you pay. Interest rates are capped at 4%. The term of the loan is 10 years. And what we're finding is these loans are meant to be easy to obtain. So you don't have to sign your life away. You don't have to do a personal guarantee, and they don't ask for collateral. You must, however, show that you can repay it. So if you had a net loss for the last 10 years and you have no cash flow, or you had no cash flow, I don't know if it's going to work out so well for you. So, that double-edged sword that we sometimes talk about when we don't want to pay taxes, so we show losses, this could create some problems for you, just like it would with any lender. Another cool thing with this is you can defer payment for 6 months to a year. What's really cool about this loan is the fact that it's forgivable. So for the 8-week period that begins when you receive your loan proceeds, you can have all of your payroll costs, rent, mortgage, interest, utilities, and other debt interest forgiven during that 8-week period. So basically this means you can have all of your loan forgiven if you play your cards right. We'll talk about qualifications for loan forgiveness in a bit. Some of those qualifications, though, are you can't be participating in other federal programs that recently came out, like under the FLMA, and you can't be paying sick leave. Those wages don't qualify. And your loan forgiveness can be reduced by reductions to your workforce. And it can also be reduced if you're paying employees over $100,000, or you jump everybody's payroll greater than 25% of what they were making before you started taking the loan. Of course, if you're taking advantage of the other SBA program through the emergency disaster assistance loans, you can't use this loan and that loan for the same purpose. They don't let you double dip. We're going to walk through the calculation of the amount you can borrow and the amount that you can have forgiven. See, I have our Paycheck Protection loan and the forgiveness calculator here at my disposal. So we're going to walk through it with this tool. So I'm going to just grab some numbers here out of the air, a hypothetical situation. So let's say we had an employer that had $500,000 of wages over the course of 12 months in 2019. Perhaps the owner was paid $50,000. Now, other wages would be amounts paid to subcontractors who could otherwise be treated as employees. I'm going to leave that zero. We can also, as we mentioned earlier, add in healthcare benefits, retirement match. So perhaps the employer paid, say, $5,000 a month, 12 months for employee benefits, and then probably another, keep it simple, $4,000 for their simple plan contribution. So there's another $64K. And of course, here in Pennsylvania, we have to pay the unemployment tax. on the first $10,000 of employee wages. So let's say we had 10 employees times $10,000 is the wage base, at a good rate of 2%. So the total amount of expenses eligible would be $616,000. Of course, we have to subtract this eligible number by employees we paid more than $100,000 to. Of course, we didn't have any of that. We didn't have any payroll taxes included in the above. We don't have any wages to non-resident aliens. And so no subtractions. Take our total amount, divide it by 12. We get a monthly spend of 51 grand, multiply that by 2.5. So our estimated loan amount that we can get under the Paycheck Protection Program is $128,000. Of course, if your average number of full-time employees drops, the amount you can borrow drops. So if you lost an employee, as an example, so you had 9 employees instead of 10, now your forgiveness amount gets reduced. But we're just going to go, one for one. So to factor your loan forgiveness, this is a fairly straightforward calculation. So let's just say everything's even Stevens for last year, and our payroll would have been 500 grand for the whole year. Get that to a weekly number, divide by 52, multiply it by the 8 weeks. So let's say you paid 76 grand in wages. Let's say we did the same thing with the officers, paid them over that 8-week period, $7,600. Maybe we're not going to mess with that one. So let's just say we paid our health insurance benefits twice, and we kicked in another $1,000 into our employee simple plans. So there's that. And given the fact that we're in the second quarter now, our unemployment tax is going to be a little less. Say that's only $1,000. Let's say we spend $1,000. Of course, we have modifications like we did before. We're going to leave that blank. Now we also get to add in some expenses for rent. So if our rent was $3,000 a month, of course we pay this for 2 months, it'd be $6,000. If we're renting, we don't have a mortgage interest, we'll leave that blank. And then our utilities paid, if that's $600 a month, say there's another $1,200, doesn't really matter. So our estimated loan forgiveness for this illustration is $103,000. So you can see that we borrowed $128,000. We have loan forgiveness of $103,000, leaving us roughly $25,000 left to pay back. Of course, you can pay that back right away if you've got it, or you can sit on it and use it for your other operating expenses. A little less exciting, but still a really good opportunity for many small businesses are the emergency injury disaster loans. These are relatively new as well. For this time period, they've always been around, but they've made some modifications recently. So here in Pennsylvania, we qualify because we're in a disaster area. You can get $2 million. And the interest rate's capped at 3.75%. Of course, it's for small businesses. I've had some folks suggest that it would be great to borrow as much as you possibly can. And then if you don't need that money, maybe you just sit on it and use it to take advantage of situations like the guy that can't make payments on his beach house, right? So there might be some good buying opportunities. I'm not really endorsing that because these funds are supposed to be used to operate your business. But anyway, that's a thought that's floating out there anyway. Some more things to consider with this loan. Loan terms are pretty good. You can get them up to 30 years. But unlike the Paycheck Protection loans, these loans require a full-blown loan application with the SBA. Now, these loans are directly through the SBA. The Paycheck Protection Program loans are administered through a traditional bank. So you'll want to talk to a traditional lender that does SBA loans for the Paycheck Protection Program. And for these loans, it's a direct application on the SBA website. You can find the link to apply for this one. It's on our website. You can just Google it. It's a pretty easy one to find. Of course, collateral is required if you're borrowing more than $25,000 for these loans. Of course, they'll accept collateral. I don't know how stingy they're going to be with this. I'm kind of thinking that they're going to be a little looser, but again, you've got to put up collateral, and that's a showstopper for many of my clients. You want to make sure you get your ducks in a row when you apply for either one of these loans. The Paycheck Protection Loan is, I think, a bit easier from what I've read to obtain. You need to have copies of your quarterly 941s for that one, as well as last year's tax return. That's for the Paycheck Protection Loan. For the emergency disaster loans that require more of a robust reporting package to apply for the loan, you can see here what you need to have. Thanks for taking the time to watch our presentation on the Paycheck Protection Program. We hope you found it helpful. If you have any questions, please feel free to reach out to us, and check our website often for updates as the landscape continues to change in regard to COVID-19 and how it impacts small businesses. As always, we hope you have a wonderful day, and God bless.